Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
So you're looking for the most vicious, cunning, stock-picking show on television? Well, you've come to the right place. I'm Bruce Whitfield. This is Share Shootout League, right here on CNBC Africa, first in business worldwide. So, was Thuli Madonsela trying to upstage the ANC press conference by having her own Twitter press conference at the same time? And just how much should actors be paid over the next couple of generations? And what chances as President Zuma will actually pay back the money? Just to invoke Julius, of course. We don't know the answers to any of these perplexing questions. What we do know that the Share Shootout League is a scorcher right now. As you can see from the results of last week's match between Nick, the value guy, and Sid, the Maverick, value guy is just managing to edge out Maverick. Nick is now on 12 points. He's tied with log leader Running Dog. This is huge. Running Dog is going to be chicken and scared. Now the one on the other hand is still at the bottom of the log and hoping to register a point soon. That is entirely up to you. Don't forget that you are the judge. Ultimately, you decide who wins the next match and ultimately who will win the Share Shootout League. Just follow at SSO League and tweet any of the stock pickers' hashtags. Well, back to the match at hand, and our first stock picker is yet to come to terms with the world that is Twitter. It doesn't have any votes. And our second stock picker is so comfortable at the top of the log that he started talking about the semi-finals already. Let's check out the players.
Now Kgantsi, portfolio manager at Nedbank Private Wealth. We are a valuations-driven house that aims to create wealth for our clients on a need-based basis, especially those who take a 3 to 5 years view on the market. I will try to, show my knowledge of the markets, keep to speed, with companies and also with my competitors, and also try to make sure that I stack up to the competition. Christopher Gilmore from Absa Wealth. I think so, because I've been in the game for some time, and my knowledge of the markets and companies is very sound, so I think that I stand a very good chance.
My name is Booysen, Head of Trading at Vunani Private Wealth. At the moment, I'm experimenting with enhanced alpha trading. You almost go and find value, good quality companies, and then pick them up, hold them for the long term. As long as it's got solid fundamentals, you put hedges in place to try and get that little bit of enhanced performance. So it's a philosophy, new philosophy, but we're trying it out. So it's going to be interesting. I think lots of prep work. I mean, it's a very tough show because you never know what the other contestants are going to do. But we're going to have to really go and dig out some good opportunities for the viewers. Try and I think also throw in a few curveballs. Try and find something, some of the more obscure stocks that are showing value. So far, my biggest competition has probably been Mike Harworth and Sasha. They've always been tough to beat. I think I have a shot at it. I think maybe the track record has been fair so far, but it's definitely going to be tough. I just hope the audience is going to base their decisions on the quality and the performance of the shares, not just on the explanations.
Well, both Neo Kgantsi from Nedbank Private Wealth and Gary Booysen from Vunani Private Clients are trying to win the league. Well, at least it's evident that Gary wants to. First, let's get the house rules out of the way. Both of these guys have pre-picked 3 shares. Only I know what they hold, and each must accept at least one of the other guys' picks. Each has got 30 seconds, maybe a little bit more, to argue their stock pick, if they're interesting, that is. And they can pick from the JSE. We give them an offshore allowance as well, so they can pick an international stock at each round too. Those are the rules. They're out of the way. We're ready to rumble. Now, because if this is the league and Gary is up there and you are on the floor, do you want to go first or second?
Okay, let me go first.
You want to go first? Get it over and done with. Okay, now Kgantsi, you're working hard for the money. You're working hard for a couple of votes on Share Shootout League.
I know wrong people. They don't want to vote, They just like to see me on TV.
Of course they do. They love to see you on TV. They're so transfixed that they forget to tweet.
Yeah. But the problem is you can't blame my looks.
No, you can't blame my looks.
Yeah.
No, they can't. We can't. No. I'm interested in this pick because it's run about 10% in the last week ever since results came out. The market was anticipating far worse results out of Truworths. Why, in 30 seconds, is it a buy right now?
Well, you know, over the next few years, I expect that Woolworths will be delivering annual returns of about 33%. We saw their credit collection costs coming down from 36% to 24%, and there's a possibility of going to 11% next year. They are a leader in the fashion world, and I believe that you know, at the moment, you know, you get 4% dividend yield, 15% forward PE, and I think that it will, you know, create value over time.
There we go. And just because you're still in your 30 seconds, it's Truworths, not Woolworths, but it's an easy mistake to make with Wool-True and the unbundlings and all of that sort of stuff many years ago. Gary Booysen, there's a lot to like about Truworths if you're in the mood to buy the company that sells the T-shirts. Are you in that mood?
Definitely not. Yeah, we're steering completely clear of retailers at the moment. I mean, I hear the argument. I mean, Truworths, I think, does look probably more attractive than some of the other retailers out there at the moment. You know, fashion, you know, the apparel side of the retail sector is always difficult though, because like Neil said, I mean, it's easy when you get your fashion brands right for the season, you make a lot of money. If you get it wrong, you know, you lose customers very quickly. So
well, you start discounting the hell out of it and your margin goes to
exactly. So it's you know, it is sort of a little bit different from you know, our preferred retailer, which is Woolies.
Okay.
Which at least has the food component to stabilize the earnings, and also now a huge offshore exposure in Australia. So you look at it, I think Truworths trading on a PE of about 13, which I mean is a lot lower than something like a Shoprite or Woolies, which is trading at 20, and a lot lower than a Mr. Price at 27.
Is it a vote against the consumer? Is it a vote against the credit cycle? Is it a vote? What is it a vote against?
I think for us it's definitely a vote. Okay, the consumer under pressure. We think a lot of that has been priced into the retail sector. I mean, it's all over the news. Everyone knows that South African consumers are under pressure. We got our GDP data out last week. We can see that you know, South Africans are struggling. But I think for me it's more the credit cycle. If you
no, one last ditch. I'll give you one more chance to try and convince
70% of all the new credit applicants in South Africa, you know, are looking for Truworths card, and 50% of those applications have been rejected. So they are very picky as to which clients they want onto their books. I mean, if you look at their credit book, good quality, as I say, you know, the collections against the book have been falling consistently, and I think, you know, as they unwind most of their reserving, that will add, you know, into their bottom line.
Look, if you're going to go to the T-shirt sector, Truworths is the place to be, but you don't want to go near the sector, so you're shooting it down, Gary.
Definitely.
You're shot down, I'm afraid. But still, I'm sure they'll provide you with a nice
Oh, yes, of course.
Young Designers Emporium, or thereabouts. Gary Booysen, you're using your offshore allowance up front, you're going for BASF. They used to make the cassettes we used to record the top 40 on our tape recorders in 30 seconds. Why do you like BASF?
They don't make much you know, consumer products anymore. They're actually you know, more the inputs into consumer products. But yeah, BASF, you'll see a theme. I'm going fairly European today. But yeah, they pretty much you know, the world's largest chemical company based, they're listed in Frankfurt, London as well. And yeah, pretty much, I mean, just enormous. I mean, they've got sort of 200, I think it's 120,000 employees. And if you're buying BASF, you're buying basically a recovery in Europe. I mean, they've got huge barriers to entry as well.
Okay, the European recovery story. It's adventurous, it's novel, and it's very brave. BASF.
Look, I don't think that there is barriers to entry, as it says, you know. There's no barriers to entry because they are not in specialist chemicals. I think if you want to be in a specialist chemicals business, you have to buy Potash Corp, you know. And if you look at this business, you know, I know that their earnings can be very volatile. But if you go back over the last 5 years, you get sales growth of about 2% on average, bottom line growth of about 7%, and dividend growth of about 3%. So nothing compelling at the moment. It's just a dull stock.
I expect you to know that level of detail about South African companies. The fact that you know that level of detail about a company you didn't know was coming up on the show is impressive. I would vote for you for that reason only. Not that I'm voting against Gary, but I would vote on that basis. That was impressive. You must have
impressive.
Pay back the money. Pay back the money, my friend.
Pay back just 2 points.
Perhaps. No, it sounds maybe like there was a leak.
There was no leak. The auditors will be called in.
Yeah, to just counter like the barriers to entry. I mean, you got to remember there are massive barriers to entry in this company because of the way that they set up their chemical plants. They've got what they call integrated plants. They've got about 6 of them. Now these basically take about 33,000 people, put them in there. They build, you know, where they bring in sort of an input of oil, and then that has this offset, and then that makes a new chemical. And these huge plants, I mean, they cost billions and billions of euros to build, and it's not easy even for a medium-sized chemical company to go and build something like that and generate the efficiencies that BASF is getting. So I got to disagree on the barriers to entry point at least.
Look, most of their chemicals are like nitric acid, phosphoric acid, and so on, you know.
Stuff you can buy at the pharmacy.
Exactly, you know. And potash, basically, 80% of the world's reserves in potash are sitting between Russia and Canada. It's a specialist chemical, you know.
So you would rather be going to that specialized space rather than to a more generic component provider into
exactly,
the world
where basically I can buy Sasol other than going, you know, to Europe.
Okay, there we go. So you shot down on that one, Gary Booysen. BASF is shot down. Let's move on to your next pick then now, and this is a short on a platinum stock. I thought we were at the beginning of a boom in platinum. In 30 seconds, why short the superstar Northam?
Well, it's because, you know, over the next few years, there will be more capex. And a lot of capex basically means that there is reduced free cash flow, and also the chances of paying dividend, you know, are going down. In fact, I expect that Northern Place will start paying a dividend from 2016. Their Zonner Einde operation at the moment is struggling. There's geological production problems there. And if you look at Booysen, there's phase 1, phase 2, and they've got, you know, ambitious growth targets stretching to 2020. And I think that will sip a lot of money.
Okay, there we go. Seep a lot of money. You've been nodding very vigorously. I think you like the short on Northam.
Yeah, I don't particularly like a short on Northam. We do think Northam's fully valued at the moment, so we're not picking up Northam at this stage. So, you know, but whether to actually, you know, actively say a sector that is depressed, that's trading on fairly low PEs, that has a lot of negative sentiment around it, that has been sold off already, and now is, you know, perhaps in recovery phase. I think a short perhaps is a little bit dangerous. Also, I mean, to short something with you know, Northam's liquidity profile, I think is also incredibly dangerous. But so I don't think it's a buy, and I take the fundamental view points that Neo has taken. But for me, like I've got to shoot down the short. I wouldn't. And also I think, you know, the script as well is very difficult to get Northam script. So actually to physically do the short in any sort of size, I think it's going to be fairly difficult as well.
Okay, so he's shooting down the short, but he agrees with you on the principle that Northam has run this far and possibly no further in the short term.
So in principle, he agrees with me, but he's shooting me down.
Yes, absolutely right. Okay. That's the way the game works.
That's oxymoron.
No, he likes what you're saying, just not enough. Okay, so there. So shooting down the short, but accepting the fact, and Neo's point of view, that the share has risen to a level.
Yeah, definitely.
Okay. Right, on to the next one then, Gary Booysen. Sticking with the European theme, don't lose your NEPI. This is New Europe Property Investments. It's an interesting one. In 30 seconds, tell me why you like it.
Okay, European exposure, I think, you know, with Mario Draghi coming in now and saying perhaps there's going to be stimulus, I think, you know, any portfolio should have a property element to it. But I think so if you look at South African property, perhaps a little bit expensive. And, you know, we are, again, in a rate tightening cycle. Europe, it looks like stimulus is going to be there for longer, making, you know, a quasi sort of bond substitute investment much more attractive. You know, the management's got a proven track record in NEPI. I mean, they've grown the business spectacularly over the last couple of years. Recent rights issue raised $1 billion, well oversubscribed. And investors are backing them.
Before I just give you a chance to respond, I just have to ask you a European-related question, broad European story. Europe is big, Europe is powerful, lots of wealthy people, lots of activity going on, but it feels as if it's going Japanese. I really think so. Is that not the risk? It's interesting, but if you look at specifically where NEPI's property is, which is primarily in Romania, okay, right next to Ukraine, so I'll take that as a criticism. But at least Romania growing at about 5.1% GDP growth at the moment. So I don't think that economy specifically, and the old communist sort of bloc countries, I think there's still a lot to go in that sector. I mean, remember they're not on the euro at the moment, so they don't face the same currency pressures. In Romania, it's still the leu. Okay.
So, you know, I think while you can lump it into, you know, perhaps a stagnant EU argument, I don't think that Romania quite fits that profile.
Let's test you very quickly. What beer do they drink in Cluj?
No idea.
No? Come on, you knew half the detail of BASF.
Yes, I will not shoot him down on this one.
Okay, now what beer do they drink in Cluj?
No, I don't.
It's called Ursus, and it's very nice.
But
there we go.
I drink red wine. No.
It's an SAB product, and Romania's got red wine, but I think you'd rather drink the beer. New European property, do you like it?
So, yeah, I fully like the company and agree with him. You know, the fundamentals are very solid. And look, even though there's problems in Europe at the moment, but remember that it's still the world's biggest economic bloc, you know, accounting for about 18% $6.8 trillion worth of GDP, you know, bigger than the US. And I think that if you strip out, you know, peripheral countries, you know, like maybe Estonia and so on, Eastern Europe, you know, there's still, you know, there's good chances that, you know, they will still maintain good growth rates over the next few years, and property will be one of those sectors, you know, that will do well.
No, I mean, there are lots of South African companies looking at Romania as an entry point into the property sector. A mate of mine considered moving there briefly. Then his wife opted to remain here. I know. It is desperate, isn't it? So you like new European property investments. Yeah. You're going to accept it. Where does it go next, though? Because it's all fine to go and stay in the old Eastern Bloc, but it's got to move westwards, surely.
I think, you know, at the moment the strategy is actually to move down into Hungary and Slovakia as the sort of their pipeline projects that they're looking at. So I mean, they are staying sort of, I suppose, with what they know, even though it's a South African management team. And I mean, you can see already their latest sort of acquisition. I mean, they've got about 10 large malls in you know, development that will come on stream probably in the next 2 years or so. But I mean, they're buying northern Romania, so they are focusing on the market that they know. And you know, I don't think that there's any real impetus to go and spread into, you know, go and buy properties in France and that sort of thing. I mean, they, you know, incorporated Isle of Man specifically to get into that segment of the market.
But why not go then for the old Liberty International companies, which are kind of easier to understand? They're in markets we're more likely to travel to, markets we more understand, shopping centres, and then central London property, which is booming. And they've got odd names for the companies now. We call them the old Liberty International. It's easier. Why these guys versus those guys?
It's a good question. I think, you know, from my point of view, I think it's the GDP growth rates in Eastern Europe. It's that whole, you know, it's the development of the old Eastern Bloc countries that still has a long way to go. And that for me is slightly more attractive than the London listed property, mainly because you've already seen a recovery, a strong recovery.
And actually,
and again, you know, if you look at Eastern Europe, you know, most of the countries are operating at literacy rate close to 100%, you know, and the number of people, you know, being elevated, you know, to middle income, and you find that if you have, you know, retail focus, you know, properties operating in those areas, the scope for growth, you know, is still massive.
So Neo gives it the thumbs up. So we've got one thumbs up so far. And before we shoot off for the break, Neo Kgantsi from Nedbank Private Wealth, Truworths, he went long on that. Gary doesn't like the clothing sector generally. Northam Platinum, he's not a fan of buying Northam Platinum and going long on it, but he's certainly not going to short it. He's worried about liquidity as a primary concern there. And then Gary Booysen from Vunani Private Clients, long on BASF. Neo surprised us with an extraordinary level of detailed knowledge on BASF, but he shot it down. But he does like new Europe property investments. NEPI, it is otherwise known as, market cap of 25 billion rand, primarily focused on Romania. You remain there, we'll remain here. We're not allowed to use the same bad joke twice. I don't think so. In the meantime, get tweeting. It's never too early nor too late. Follow at SSO League and cast your vote for either the one, who's Neo, or Running Dog. He's the tall guy. There's power in the hashtag. We'll see you when you return. You're watching Share Shootout League. It's the only league without free kicks, although the players are free to kick each other if they choose to do so. You have to choose between the one and Running Dog. Where will your vote go? Here on CNBC Africa, first in business worldwide. Now, remember, this is match day 19, and through your Twitter votes, one of these stock pickers will change the look and feel of this league. You follow at SSO League. You vote for either the one or Running Dog. We have a look at their shares this evening. Gary Booysen from Vunani, BASF shot down. And then new Euro property investments getting the thumbs up so far for Neo, who went first in the last round. He went on Truworths and Northam Platinum, a short on Northam Platinum. Both of those have been shot down. So Neo gets to hold onto the final card in his particular pack for a few more moments. Gary Booysen, you have to go with your European theme. He could go SAB Miller. He could go, what else? He could do Richemont. He could do British American Tobacco. But he's going to paper over all of those cracks. He's going to package it slightly differently. He's going to give us, in 30 seconds, Mondi.
Much better, Pants. Yeah, Mondi, I think, again, spectacular. We've had a nice pullback to sort of the 180 level. It's trading on a very reasonable PE of about 13 at the moment. And yet, I think it's still generating a huge amount of cash, fairly good results coming through. And, you know, if you look at it, I mean, if you look at the drivers of its business, I mean, it's done all the right things compared to a SAPI. But, you know, with packaging, it's a growth sector as much as everyone looks at paper as a twilight sector. You know, the fact that, you know, more products, more, you know, sort of convenience shopping, all of it equals more product
But
for them to sell.
haven't we seen the run? Are we not buying it at the wrong point
On
in the cycle?
a P of 13, you can't say that you've seen the run. That's still cheap. And
No,
on the yield of
P
3,
is just a ratio, you know.
yeah, it's just a ratio, but it's also
the share price has re-rated considerably in the last 18
Yeah.
months.
based
And
on
for-
increasing
yeah.
earnings. I mean,
Look, I don't think that their earnings will collapse. You know, it will still continue to be profitable, highly cash generative, and I think that the cost base basically has reset itself as a benchmark. You know, so from these levels, after a strong rally, I don't think that there is much value left in that company.
Not much value left, Gary Booysen.
yeah, what can I say? Like that, I can't dispute Neo's view there, but yeah, for me, it looks like a screaming buy. It's pulled back $20. This is a 210 rand stock.
Yeah,
that's trading at 180. I think you should be buying
Look,
it today.
you're picking it up, at a price, at a PE of 13, but what is earnings growth, forecast over the next 3 years? I don't think that you'll be lucky if you can get 10%.
Yeah, earnings growth on Mondi, I think, but you are looking at you're looking at about 11% in Europe at the moment from Mondi, which I think is reasonable. But if that PE moves up to sort of 18, even with flat earnings, that's and what the JSE trading at 21 at the moment. So I mean, if it even got to where the market average was at the moment, you're looking at sort of an 80% gain on the company.
I'm shooting from the hip.
You're shooting from the hip, you're taking him down. With Gary Booysen, you do that, you only hit him in the kneecaps. Okay, so you've been kneecapped, Gary Booysen, on this one. You're going short again now, and this is interesting because just last week a company came out with results. Effectively, the company says the company says that things are not going to get any better. If anything, our underwriting margin is just a little bit too big at 7%. If anything, the global insurance sector is having just too much of a good time. I think the bottom was 2011 with the Japanese earthquake, and the global insurance industry had like $1 trillion worth of payouts. So far this year, the global insurance industry has paid out like not even 100 billion, I don't think. And Santam has had a remarkable run. You're going short on Santam. Tell me why.
Well, it's because, as you said, underwriting margins of around 7%. If you follow back their history, I mean, they've always operated between 4 and 6%, and I think that 7.4% is basically rich, and I think that it's bound, to pull back. And if you look at the valuations, this is a company that can pick it up, at a P of about 15, and you're talking about price to book of 3.6. So basically, it's priced for perfection, and for that reason, I expect that over the next 3 years, there will be earnings growth of about 3% per annum. Hardly a compelling story.
What percentage does Sanlam own of Santam? They control it. I forget the exact percentage. It's over 50%, obviously. Yeah. But is there not a risk in shorting a company that's got a big daddy shareholder?
Look, a good company in itself doesn't mean a good investment. If you're buying a company for a P of 15, where you're going to get earnings growth of 3% per annum for 3 years.
Okay.
Would you do that?
Okay. Would you short Santam? You've got to accept it, Gary, because are you pleased with the fact that you've waited this long?
No, I'm not pleased. I'd probably rather short Northam because I mean we're in a raging bull market at the moment, and we can see the kind of numbers coming out of the insurers at the moment. I mean, obviously different businesses to Santam, but I mean Discovery numbers massive.
But not even Ian Kirk can believe his luck. Yeah, and he's the CEO.
Yeah, I can't in good conscience go short of a stock that is of a sector that is that strong, in a market that is this strong, in a stock that actually benefits from the market that is stronger.
Conventional wisdom dictates that you short an investment once it's too strong, and you buy it when it's very weak.
Perhaps you pick the top, but I don't think so.
And that is how you add value. But Gary Booysen is the kind of guy, who buys at the top and sell at the bottom and gear himself in the middle.
He's a trader. That's what he does for a living.
I do. Yeah. I've seen the damage shorts can do to portfolios. I'm afraid for your clients.
All I'm doing is just taking profits. Nothing more. There
we go.
Are you instituting a short? Because it's two very different things.
Instituting a short is a dramatic step.
Yeah, that's not taking profits. That's actively betting that it will go lower. And if it goes higher, you're going to lose money.
But it's not likely to go higher, and that's the point. Hey? Or
what would be the catalyst?
Is it the underlying investment
Yeah.
flows that keep coming into these portfolios that will be used to invest in an ever-rising market?
To be perfectly honest, yes, the market maybe looks a little bit toppish, but with, like you say, with the huge amount of liquidity that's sloshing around here, I think, you know, even looking at the PE game these days, it's the whole landscape has changed, and this market can still go up for another 3 years with you sitting looking at that short going, why did I take Santam short?
You're about as happy to pick a short on Santam as you are to be blindfolded and asked to walk through a minefield.
Pretty much.
There we go. At that point, we will leave it. You've got one over the other. We'll be counting the votes till the witching hour on Sunday. These guys, especially the one, he's the little guy, who need your votes. So follow at SSO League and vote for whichever one of these two stock pickers impressed you most. Is Nao calling it right? Is Gary calling it right? Is Gary deserve his top echelon spot on Share Shootout League, or does he need to be brought down a peg or two? Should Nao come off the bottom? That's all entirely up to you. And if you do know Nao and you do like him and you really want to preserve his dignity, just join us again right here on CNBC Africa next Tuesday, 8:30 for match day number 20 on the most merciless stock picking show on television. Till next week, stay cunning. Good night.